Hello, this is IK from Pips 365 with another video for you today. So today we'll be analyzing AUDUSD. So this chart looks a little, let's use a better chart. This chart looks a little, let's use a clean chart. So let's use CMC markets. So we'll be analyzing Australian dollar today. Australian dollar is a very interesting pair. So let's start our analysis from the monthly. So from the monthly, we can see the monthly is a bit bearish but bullish at the same time, because we can see a strong move to the downside and it's retracing back up. So the monthly is a very interesting level, and if you come over here, you see a reaction over here. So we can mark this reaction in the monthly because price is reacting strongly from there. But the most important thing here is that you can see how the monthly closed above that reaction. It shows that the monthly candle is still bullish. This is just a retracement. So AUDUSD, I'm expecting more upside for AUDUSD coming next week. So let's go to the weekly. So on the weekly candle, we can see some rejections going on here. That doesn't mean that we are bearish at the moment. So this zone, which is a monthly zone that aligned with a weekly zone, this zone AUDUSD is forming a huge rejection on this zone. So AUDUSD is, you can see the rejection AUDUSD gave on that zone. So we rejected it the first time, made a bearish move. The second time we expected to close above it, but we still rejected from it again. So let's go to the daily. So even though we rejected on the weekly, we did not have any open close. So the daily did not close below this level. So since the daily did not close below this level, instead it rejected from this level. So what does this tell us? It tells us that the bulls are still in the game. So if the daily had closed below this level, then we will be talking about some, then we know that the bears are in control. You understand? So the daily did not close below this level, and there's another level here that price is reacting from this same daily. You can see over here we have some. Let's go to the 4 hours. We can see something happening here. Okay, it's not so clear over here. Let's go back to the daily. So we have an open close level on the daily. The price refused to close below, so it means that the bulls are still in play, even though the weekly rejected from this monthly zone and this weekly zone. From this monthly zone, the weekly rejected from it, but the daily refused to close this open close level. So we can still expect some bullish movements on this. And let's, over here on the daily, we can see some reactions. We can see some reactions over here. I don't know where to draw this from. This is not too clear. You can see some bears took out. You can see some buyers over here. So we can see this is a closing price. Draw this one, closing prices. So we can see some reactions over here where we had some sellers. It was broken. They tried to buy it. Tried to make some buys here. They took it out. So we closed above it, retested it, and resumed off. So what did this daily candle do? This daily candle rejected off that zone and closed above it. So this shows that if the daily had closed below this zone, that's the end of it. Coming next week, we'll be looking for. So that's why you need to understand reaction points in the market. Reaction points in the market are very important. If you understand reaction point, you'll make a lot of money in this market. Look at this candle. This candle, if this candle had closed below this level, if this daily had closed below this level, next week I'll be expecting a retracement either off this same level or a retracement. I'll be expecting a retracement of this level or a retracement of a level above here. Then I'll be expecting more downsides. So I'll be expecting a crash of AUDUSD if this had happened. So the daily candle also, even though the weekly rejected these zones, the daily still gave us a bullish significance, telling us that, see, I'm not ready to go down yet. So you can see, this is what I'll be expecting. If this guy had closed below here, I'll be expecting a rejection from here. If it doesn't reject it, I'll be expecting a rejection from here. For my mind will just be bearish. But because we had, so coming next week, if we see a bearish close below here, coming next week, then just know that and we don't see any bullish engulfing candle maybe closing above this level and invalidating the whole move or something, then we know that this level is bearish. So on the weekly, on the daily, we can see some rejections of this level, so we can still expect some bullish moves. So this is a retracement. So coming to these 4 hours where our entry should be based on, so I'm expecting some bullish move on AUDUSD. I'm expecting some bullish move on AUDUSD. If you see what happened here, let's go to the line charts. If you understand what happened here, you understand that this is a falling knife, and this falling knife always leads to, whenever you detect a falling knife like this, which is an inverse head and shoulder, it always takes out this topmost level. So that's why you can see once they've taken profit, the institution, they entered here. So once they've taken profits, market starts retracing, but that doesn't mean we've entered the bear market. So this is where the retail, because this is where the institution, they're the ones that determine the move. They made the first move with high volume. Can you see the volume? So whenever you see a move, a straight line like this, just know it's an institution that's sold with high volume. Thanks to the price. These are institution volumes. These are institution volumes. All these are not, can be retail, but these are institution volumes. These are institution volumes. These are institutions that made a buy here. And look at how the market's also tracing small. So once we close below this on the daily, and it's also a confirmed close on the 4 hours, then we can expect some bearish move of this whole candle. But currently we are still bullish. So where can we buy from? And so if we are talking about, let's go back to the daily to see if there is any level that can give, or let's go back to the weekly. So if we go back to the weekly, the next, if we are going to be buying from that zone next week, on the weekly, you can see this support level here. Can you see this support level? You have to mark this level. It's a very important level. That support level was a support level that was, can you see how the weekly supported this level? Pushed all the way to the outside, came back, retested it, closed above it. The bulls thought you were in blame. Next week, we close below it with a sharp. This is volume. These are institutions. So we retested it again, and that led. This was in what? Since November of 2024. So we are going to revisit this level. If we are going to buy, this level is going to be a very interesting 0.66732. Watch out for that price target. It's going to be a very good level to watch out for next week, because the buy zone there is. So I'm expecting some buys over here. I'm expecting some buys over here. You can go to the lower time frame to see if there is any. Let's go to 15 minutes. 15 minutes is for perfect entries. You can see we have a head and shoulder pattern building here. I'm expecting this to be taken out and a retracement, and so we can see some rejections. A head and shoulder pattern building right on the trusting zone here, showing that the bulls are still in play. So coming next week, we can expect buys. Let's draw our Fibonacci level. Where is our Fibonacci? This is Fib extension. So if you draw a Fib extension from here, hit it over here and drop it over here, what can we notice? So we need to know where our ultimate target is. Our ultimate target is at, okay, let's go to the daily to see the ultimate. So the ultimate target is at 1. Can you see that this is at 1 Fibonacci level? So I'm looking for where that 0.6607 is. It's not showing over here. So let's go to the weekly. Fine. So you can see that level 0.66732 is at number 1 Fibonacci level. So a buy from here will take us all the way to that level. That level has to hit 0.66732. AUD will retest that level, and once AUD closes above that level, the next level target is 0.7. I don't think there's any other level that can stop price. This 0.6, let me draw the two levels I need to watch out for. See these two levels. Once AUD USD breaks above these two levels, either on the monthly or on the weekly, it closes above these levels. It closes above these levels, either on the monthly or on the weekly, will take us all the way to 0.7. And this is our extension, Fibonacci extension. Looking at this Fibonacci extension, we're expecting some buys from here. So a very good stop loss for this trade. If you're going to take a buy from here, you can risk 1% of your capital on this trade, and the total returns, you risk 1% somewhere around here. The stop loss should be somewhere here below this level. So if you risk 1% on this trade, while reaching over here, you can make, like, you risk 0.5 into two places. So if you risk 0.5 here, over here you can make up to 2%, or you can make 2% over here, then you can make another 4%. You can, this trade can give you the biggest money. So let's watch out for buys. Let's watch out for buys. If you risk 1% of this trade, you can make close to 5%. This is your first level target here, 0.66190. 0.6619. I can even say the first level target, I can put it over here as 0.66, because this weekly level is also a problem, and you can see some buyers try to come in there. But this is the first level target, 0.662. And the second level target for this trade is 0.66732. So it's going to be a very tough one for AUD. Let's see how this goes next week. Thank you for watching. Don't forget to like and subscribe, and have a nice day. Bye bye.